Well, everything about this year so far has been strange. So the fact that today, July 15th, is tax day doesn't even faze me anymore. We have Kyle Winkfield back. He is the president of Finley Alexander Wealth Management. Thank you so much for being with us.
Hey, it's great to be here also.
So July 15th is the new April 15th, I guess. Let's start out by talking about tax deferred accounts and wondering just what we need to know.
Yeah, I think what people need to do with any money that they're saving is always keep in the front of your mind, what is the tax implication of me putting money in this account? So probably the two largest assets people have is the equity in the walls of their house if they're a homeowner, and also that pre-tax account known as an IRA, 401k, or SEP IRA. Any of these things are putting money away for the future to use. And I think so many people don't realize or realize emotionally that the amount of money they're putting in that 401k account or IRA account, the biggest question I have is, well, how much of that money is yours and how much does the government have a claim on? Because remember, every dollar you put in those accounts, you have put in pre-tax, which means at a later date, you're postponing taxes today so that at a later date, you'll pay the taxes on those dollars. So really what you're gambling with or rolling dice on is that tax rates will either be the same or they'll be lower in the future. And none of us knows what the future is going to hold. I mean, after all, we're talking here on July 15th instead of April 15th, right? So
you're absolutely right. I think in this current climate, this has taught us all that no one knows what the future holds. But you do say that taxes are inevitable. So we do know the future will hold some taxes because can never get away from that. But you say that they don't have to be paralyzing. So tell me what that means.
Yeah, so I think sometimes when people realize they put a couple $100,000 away in a 401k or IRA and then they're getting ready to retire and pull money out, and they realize, oh, I'm not going to be in a lower tax bracket like I was told I was going to be. And oh my gosh, look at all this debt that this country has. And after the stimulus with the coronavirus, could that mean that tax rates in the future, along with all the debt, could they be higher? And if they are higher, let's just face it, taxes are inevitable, just like death and taxes, the only thing you can guarantee in life. And so the question is, where will tax rates be and where do you think they're going to be in the future when you need this money the most? And so it doesn't have to be paralyzed. You just have to understand, here's where I'm putting my money right now, and what does that mean for my access to it, and how much of it do I really get to spend, and how much goes out to the government.
I know you're saying it doesn't have to be paralyzing, and you also say a lot of times, don't panic. Why do you say that when it's so easy to panic? There's a lot to think about.
Yeah, let's face it. It is easy to panic. I'll give you that one, because it's like, oh my gosh, I've got X, Y, Z, and now you're telling me I got to write a check for way more than I anticipated.
Right.
But I think really the reason I tell people not to panic is there's what you know, there's what you know you don't know, and then there's a whole bunch of stuff you don't even know you don't know. And I think the strategies you can put in place today, there are plenty of strategies you can put in place today that can reduce or alleviate a much larger tax bill down the road. So the question is, are you aware of what those strategies are? And once you're made aware of them, can you use any of them, or how can you use some of those strategies today so that you can have more of your money you've worked hard for to spend in the future to do the things that you want to do?
You always have such great advice. And I know that one of the pieces of advice that I took home was don't set it and forget it. Explain to us what that is, and if there's anything else that you want to pair with that.
Sure, Elsa. So many of us, when we're thinking about saving money, when we're saving money for the future, it really is a set it and forget it kind of deal, because the future is a place that you're not at yet, right? So you have tendency to be like, okay, at least I'm saving money. That's great. But as the administration changes, as government changes its policies and whatnot, so does the landscape for how much tax revenue they're going to need. And I think there's enough going on right now, and has gone on in the past, that says one thing and one thing only, that tax rates may likely be much higher in the future. In fact, David Walker, who used to be the Comptroller General of the United States, said that tax rates will double in the future a while ago, and he said it's a 4-letter word, and people were like, oh, is it debt? Is it kids? No. It's math. So the math says, hey, tax rates probably will be a lot higher. And when you start thinking about the majority of people's money that they're going to be counting on in the future is in a place that could be reduced simply by higher taxes, it makes you say, are there things I can do now to get in a more tax advantaged place?
Well, I think all of our viewers are probably thinking that right at this moment. So why don't we tell them how they can get in touch with you to help navigate these waters right now?
Well, you can go to finleyalexander.com. You can email me directly at Kyle, Kyle, at finleyalexander.com, and throw your tax questions at me, and I'll see what I can do to help enlighten you and leave you better than I found.
All right, Kyle, thank you so much for being with us. Really appreciate it. And we'll be right back with more Midday Maryland right after this. Stay tuned.